Today's market call is presented by FactSet, financial data and analytics powered by Tomorrow, and SoFi. Get your money right, all in one app. After 11 a.m. on the East Coast on this Thursday, May 29th, it's market call. It's Swizz, it's Dan. That's it. By the way, as we're sitting here, Dan Nathan, on this Thursday, the 29th of May, which is now full Gemini season, Amanda Diaz might be in labor. We don't know this, so I'm just throwing it out there. Obviously, we wish her the best. Amanda's doing great, by the way.
She is doing great. And, you know, it's funny about that guy. She was working right up until the moment.
She was. Come on.
That she said to us in our group chat, hey, this baby's coming. And literally, she was organizing stuff right up into the moment. So we give Amanda
she rolls.
And by the way, so that also means, Guy, that we have a new team on the market call. Not a new team. We have our old team, but different people stepping up to do different things.
You know, right one person leaves, and you got you people step up.
I'm looking at Timmy over here. Okay, managing the studio. He does a lot other things than that. Bill's out, and then we have Stephen Rafis. He's he's manning the ship here. But this is one of those days. It is a T-shirt day. We're just gonna start calling it a T-shirt day. Interesting day in the markets. We got
it is a T-shirt day. I give you that. It's a T-shirt day.
Oh, by the way, we have two. There you go. We have two things driving the price action. We have some stuff on the trade and the tariffs. It's getting a little boring, but we'll get to that. But it really is these gaps that we saw on the back of Nvidia, on their quarter, on the guidance, on the commentary. You know, Nvidia is still up a bit. It's down from its highs of the day. But it's really what's gone on, and I think in the other names that it was dragging up with it. And this is the mind
the gap. I love that. Great job by Stephen Rafis, by the way. So let's look at the first chart, and we can mind the gap. So this is Nvidia. And listen, we talked about this last night on Fast Money. We talked about it yesterday. We both said, at least I said, I was hard-pressed to believe that given everything that Jensen Huang's been talking about for the last 3 weeks or so, they're going to say something that's going to move the needle. And I'll be honest with you, I don't really think they did. But what the market was encouraged by, I think, was the fact when you back out, all the negatives from the China tariff, so that whatever word you want to use, is probably better than people thought. And you back things out, and the margins were actually in line or slightly better. I think the market collectively breathed a sigh of relief. But with that said, what we also said it could happen is you have a replay of what we saw back in January, where you had that engulfing pattern. Now, there's a lot of room left for that to happen, and I'm not suggesting it will. However, if you look at the intraday move to what we're saying, I mean, at one point today, this traded below 140, and I still think there's a chance that we push as the day progresses, this thing just starts to slide lower, because as good as it was, I don't think it was good enough to warrant a continuation to the upside.
Yeah, make a 5-day for this, Stephen, and we'll see kind of that gap actually. And so, I mean, at some point it felt like it was going to fill in that gap, but we're going to look at some of the other names. The one thing I'll say, if you go back to that 1 year, when you think about just the volatility, you talked about that late January sort of move, and it kind of as a double top there and engulfed. You saw the new high, and then it kind of closed on the lows that day. And then here we are, back towards the levels. I think what's important here is those highs in February, right? So we were making a series of lower highs. That gap that you saw in late January, that was when DeepSeek, released this reasoning model, and that freaked out everybody. The stock closed down 17% of that. On that day. And what's also interesting is how much the sentiment has changed, guys, since then. Because the headline this morning is that DeepSeek released a new version of their R1 reasoning model, and it doesn't shake any of these names whatsoever. I think the narrative quickly became that, DeepSeek and their ability to kind of create this model on not billions of dollars of GPUs and the like, on millions, maybe tens of millions, who knows, even if it's hundreds of millions, and so the narrative changed a lot. And I think to your point, into the print with Jensen out there, everywhere he saw a mic or someone to speak in front of over the last few weeks or so, he had been doing that. In some ways, it was kind of talking down expectations with all this focus on regulations and export bans to China. And we've been talking about this now for a week or two since Jensen was with the president in Saudi Arabia. Like, the narrative was like, okay, well, maybe these new sales, these new data center commitments in the Middle East, we're going to kind of sop up some of that sort of excess sort of demand that might have been, gone, I guess, from China, if you will. So if you look at it from a technical basis, guy, we got back towards that 200-day moving average. We had this little flag that was forming. We broke out of it. So let's just mind that gap. Let's see how it into the close. But let's go back to that slide that we had with some of the other semis that had kind of been, I guess, kind of gapped up in line with what was going on with the narrative with Nvidia. We also have some of the hyperscalers there. So they've given back a lot of the gains. And I know that you want to focus a bit on Broadcom, Marvell, and ARM, which had actually really nice gaps and gave it all back over the last.
Let's look at Broadcom. It's even made the chart here, and we'll take a look at it. We opened higher, seemingly, giving it all back. And we traded to levels that we last saw back in December, which I think should be somewhat concerning. Again, that let's just sort of go back and look at history. It was in December where, and again, this is a name that I think we collectively liked on valuation. They came out with a quarter and a subsequent guide and commentary that had the stock up some 35% or so, which again, something historically we really haven't seen. We thought we could give a lot of it back. We did. Not only did we fill the gap, but we traded significantly through it back in April, like most things, traded back up to the 200-day. Now here we are where the bulls have proved themselves, but in order for this to continue, you got to close above that prior high, in my opinion. And if we were to close lower today and sort of create another one of these one of these engulfing patterns, that's no bueno, especially given where it's just traded up to. So this absolutely is worth watching.
Yeah, and one of the things that's so interesting about Broadcom and even Marvell, and we've talked about this a lot over the last few months or so, is that the narrative back in December when Broadcom issued that guidance, and Marvell was right on the heels of that. I mean, that company, Broadcom, gained hundreds of billions of dollars in market cap just on the narrative about the 2027 expectations for spend on custom silicon. So that's working with some of Nvidia's biggest customers to create chips that are for specific tasks, for specific computing tasks, right? And so that sort of narrative kind of fell by the wayside a little bit when you saw what I guess DeepSeek was also able to do with some of the innovations in and around chips, out of either lower end chips from Nvidia or Huawei chips and the like here. And so that was, something that was one of the hardest hit narratives into the April lows. You saw it come storming back here. And that's why I think those December levels are really important. And you mentioned valuation. This was one, relative to a bunch of other names in the space, was trading pretty cheap. Let's pull up the Marvell because, Broadcom and Marvell report this week, I think today after the close, and it'll be really interesting to see what they have to say. This is one that I thought from a technical perspective, guy, looked pretty interesting. We talked about that flattening out of the 200-day moving average. We see that gap to the downside. This is a stock that's gone gapped up, gap down, some big moves in and around earnings. And you say normally, well, this company then, if they have those sorts of alternative gaps quarter over quarter, maybe they're not great at forecasting their business. Maybe they don't have great visibility into their business. So this is one that has clearly underperformed off the April lows relative to Nvidia and Broadcom. And I just wonder if there's a gap fill to be had.
Well, that's what I thought yesterday. I'll still think it today. I'm not going to back off, but if you look at today's price action, you have to be somewhat concerned, I think. Again, opening on the highs and now seemingly sort of drifting lower, again, potentially creating an engulfing pattern. And, that remains to be seen if that holds or has any bearing whatsoever when you get earnings. But with that said, I mean, this is not particularly encouraging today. I thought that there's a real good chance that on the back of earnings, we fill that gap and you'd be like, there's no freaking way. I mean, that is a huge percentage move. Yeah, it is. We've seen moves like that before. But you have to be concerned about the price action today. We just mentioned Broadcom. We're talking about Marvell. Remains to be seen what Nvidia is going to do, although I do think there's a really good chance it continues to slide the rest of the day. This has to give people a little bit of consternation, I think, moving forward. If on the back of that tariff news that, obviously got at one point last night, I think S&P futures were up 80-something handles. A lot of it's given back. I mean, this is typically where you can exhaust yourself if you're looking for potential exhaustion.
Yeah, and let's broaden it out. Let's look at the S&P 500 here for a sec, because again, why is Nvidia so important? Well, 25% of the S&P 500's gains last year, and it was up 25%, came from Nvidia's performance here. And so, we look at that gap that we had from the push out of the China tariffs here. We kind of check back to that 200-day moving average. You and I think on Friday afternoon, we're fairly convinced that we're going to get a filling of that gap, right? As some of the just, and listen, we can go on and on whether the taco thing is kind of silly or not. That's Trump always chickens out. This is something that a lot of market watchers have been talking about for a while. Our good friend Doug Cass at Seabreeze, who writes for thestreetpro.com, had been talking about this pattern of, you put out these big threats, you kind of, have really, I don't know what you want to call it, threatening sort of talk about what your ability to do is and whether, the storm better than whoever you're threatening, whether it be China, whether it be the EU, whether it be, Canada and Mexico, and then you pull it back, right? So now that there's an acronym for it, maybe that's one of the things that makes it very clear on a broader context, away from some of the folks like us and Doug who are looking at this stuff very closely. And so, the idea, and I'd also give Doug a shout out here, because I think he was one of the first folks that started looking through the worst case scenarios in early April and he details all this stuff in his blog on thestreetpro.com, how he was getting a bit more bullish because the sentiment had gone too negative, right? And I think just over the last couple of trading days, the way he's been talking about taking the other side of this and playing for a bit of a pullback or a retest of some of those levels, maybe back towards that 5,700 level in the S&P 500. And I think that's the way to trade it. I think that's what this taco narrative, Trump always chickens out, whatever you could say, caves. The Trump always caves on this sort of stuff because it's a pattern that is tradable. Does that make some sense to you, Guy?
Yeah, I mean, I'm not going to debate whether or not he's chickening out or not, but your point about a pattern is exactly right. I mean, I think we've seen how the pattern works. You sort of lead with the big stick, walk it back a little bit, wind up getting what you wanted in the first place, potentially. The market has a different view. What I will say about that question and then the subsequent answer is, again, through the lens of the market, I mean, that clearly irked him. And, this is a person that when he gets sort of exorcised, he's probably going to lash out is what, and again, it's not me being political. I mean, I'm just trying to read the tea leaves. So as much as the market loved that court ruling last night, I think there's a really good chance over the next day or so, you see a subsequent act or tweet or something that has the market back on its heels again, which is why I think today's price action is so important. If the S&P gives up the entirety of that move, and if Nvidia were to close, below sort of 139, 138 and a half, I mean, that should be concerning to market watchers and market participants. And maybe, some of the exuberance that was the complete flip side of some of the desperation in early April starts to get worked off.
Yeah, and VIX at 19 is suggesting that, to your point, that we might hear some rhetoric that, listen, your point, about political or not political. I mean, here's a guy who has an agenda. He's told us they didn't care about the stock market. And I think the point about this kind of narrative is that they do care about the stock market, right? And so you could say that, is there a Trump put? Maybe so. I mean, I don't think they liked it when the stock market was in clear, correction mode. You just do the math looking at this chart. We went from 6150 to 4850 in, about 6 weeks or a little less than that. And it didn't take much for them to kind of say, okay, it wasn't just about the stock market. It was also about the treasury market. Let's pull up the 10-year U.S. Treasury yield. And we've talked about this a little bit ad nauseum, but we are kind of stuck in and around this kind of 4.5 level here for the time being. And then you look at the Dixie, the U.S. dollar index, right? And so we were talking to a strategist offline yesterday or the day before, I can't remember. He had just gotten back from a marketing trip meeting a lot of European investors. And, he was given no sense whatsoever that the Sell America trade was not something that, that was not on the tip of everyone's tongues, despite the fact the stock market had come back. Look at the dollar. This is one that took a sharp, leg lower, as it did with, U.S. Treasuries when we saw yields going higher. Those were the things first and foremost that I think, got the administration, got the Treasury kind of their antennas up about what might happen if they are to proceed with the reciprocal tariffs at these extreme levels. So I think it's more important, forget the VIX, because that's a measure of volatility on the stock market. Keep an eye focused on the Treasury market. I know you are, and the dollar.
100% I am. Obviously, right now, if you want to put up a TLT chart, you'll see there's been a bounce in the TLT. So yields have backed off again. You just said it. There's this sort of 4.5 level, which seemingly is this line of demarcation that the market is sort of dealing with. I want to be crystal clear. I still think yields go higher, but let's talk about the dollar, because the dollar yen move to me today is worth watching. We pull it up if you want to do an intraday, Stephen, or if you want to do a couple day. You've seen this pretty dramatic sell-off in the dollar versus the yen, or rise in the yen, specifically over the last 24 hours. I mean, I think as we're sitting here, dollar yen is about 144 and a quarter. About 144 and a quarter. At one point today, just for context, dollar yen was north of 146 and a quarter. So you'd be like, that's not a big deal. In currency worlds, that's a big deal. And if the dollar continues to weaken against the yen today, I mean, that's going to be one of these things where I think people are going to start to talk. And again, that 141-ish level is sort of a line in the sand. I want to say, I think we're taking it out, Dan, and I think you're going to see a dollar yen below 140 in the not too distant future. And again, I think I know what that means for the equity market. That remains to be seen, but I don't think it's bullish.
Yeah, no doubt. I mean, the macro seems to be as clear as mud, Guy. And I think kind of the next headline that we see out of the White House, whether they care about court rulings on their trade policy, I think that's something that, could cause a bit more volatility in the risk assets that we just discussed. And, one of the things that's interesting about the court ruling and the appeals that's happening from the White House is really about who has the power of the purse, who has the legitimacy, to kind of put through this sort of trade policy and these sorts of tariffs. And we know that they don't really care much about that sort of stuff. So again, all right. So you just had a little smirk. I just saw that. If
no, because so I'm reading the questions. So Chris L says, Timmy, throw this up. Amanda in labor, and Dan is like, hey, Amanda, can you throw up this chart? I mean, it's probably just muscle memory stuff.
Oh,
so I thought was sort of funny.
I didn't say racist.
I don't know. I mean, listen, it's funny regardless of what you said. But this next question is from Peter Gisland, which I love that name, Peter, P-T-O-R, which is very, I think, Norwegian. If yields remain firm, isn't the Russell 2,000, 3,000 strength a bit tenuous? Absolutely. And I appreciate this question. So I do think yields are going to go higher, which I think is going to really hamstring these small cap stocks, whether it's the IWM, whatever you want to look at. Yeah, I think it's going to be problematic because the most economically sensitive names are these small and mid cap stocks. So they bounced off the April low like many things did. Like many things did trade through the 200-day. This didn't. So, yeah, I think the Russell can potentially go a lot lower from here, in my opinion, Dan.
Yeah. And so again, I feel like we haven't spent a lot of time on small caps of late. I think that, prior to, the tariff situation, I think folks felt like if we were going to see a broadening out of the market rally, if we're going to see the economy benefit from inflation going lower, you're going to see a benefit in the smaller cap stocks, especially if yields were going to be coming down. But now in this tariff environment, I mean, what we've seen very clearly, whether we have, these minimum 10% across the boards stick around globally, this is going to weigh on small businesses here in the U.S. And it brings us back a little bit to, the unemployment situation here. And, might we see some kind of noise in the, in the May data when we start to get, that May report or a focus on it at the end of next week? And I'd say that if 2/3 of the, the U.S.'s employment comes from small, medium-sized businesses, you might see an uptick. And I know the claims came out today and, we saw a number that was 10,000 above on a 230 sort of number. I think Peter Bookvar, a friend over at Bleakley who writes the book report, was saying, listen, if you look at the 6-month average, we're right there into it. But if we start to see some weakness in the employment picture, then that's going to continue to weigh, I think, at least on smaller cap stocks. And just look at this chart right here. It's still down 7% on the year. We have, most of the major, like, the S&P is unchanged. The NASDAQ's unchanged, up a little bit, and it's still down 15% from its highs made in late last year. So this sort of lag in small caps is definitely something to keep your eye on. I'm not saying it's the be all end all for what it means for the rally off of the lows, but it is suggesting that under the hood, or at least in small business land here in the US, that there's still some pressure from tariffs.
Agreed. And that sort of leads to Carter's question, Carter Evans, not Carter Worth, outside of Nvidia, why is the market up with the tariff news? The president always seems to have ways around it. It seems a bit ridiculous. And I think we addressed that. I do think you're going to see rhetoric that, as much as the market liked it last night, will dislike it today. This is from Gary Webb. Guy, please update us on your thoughts on Newmont. It was my final trade yesterday. Yes, it was. I've been fairly negative on it for a while. Yes, I have. So what I saw in Newmont yesterday specifically was a decent close. I like the way it traded. And quite frankly, I like the way it's bounced off today's lows as well. My view about gold. I think Newmont, there's a really good chance that we take out the levels that we saw back in October, which I think was about 58 or so. So, I'm watching this because I'm still a believer in gold. Newmont obviously being one of the shittier, yes, that's a financial term, equities in the mining space. But, I think just on valuation and catch up alone, you can trade the levels that we saw back in October. And I like the way it closed yesterday. So that was that. Real quick from Scott Rogers, Dan, and this is, I think, really important. So what happens when the USA can no longer service the interest on the debt? And that's been, I think that's one of the things that Moody's came out a couple Fridays ago. I think that was one of their concerns. It's been one of my concerns. I think what it means is yields go higher. I don't think there's not going to be a failed auction, but I do think some of these auctions are going to be bad. And I think it means yields go higher. And that's something I've been watching for a while. And my concern has been unfounded through the lens of the equity market, but it hasn't gone away.
Yeah. I get it. This is something that, we've had, so you're talking about financing the debt. You're talking about the need for yields to go lower. We are fairly clear that was one of the reasons why Treasury Secretary Bessent was targeting the 10-year yield as they thought about risk assets that have the ability to move after, this April 2nd. I'm sick of calling it Liberation Day. It's so stupid.
I've never used the term.
I know,
so
but if you think the taco acronym is stupid, like Liberation Day is dumber. The way I think about it, and like I'm listening to these people on on CNBC or wherever else they're talking or whatever, and they use the term Liberation Day, and I'm trying to look at them. I'm trying to see whether they're doing it with a smirk, whether it's like a sarcastic sort of thing, or it's kind of like the big beautiful tax bill. How can you say these things, right? Like, I'm just saying in general with a straight face. So, some of the folks that do say it with a straight face and they really do believe it was a Liberation Day, I got to scratch my head a little bit and say to myself, I just don't get it. But, debt service, we've had Steve Eisman of Big Short fame. He's been on Fast Money with us. He's been on live events with us. He's been on our podcast. And, repeatedly when he's asked the question, and here's a guy who knows a little something about debt and the weighing of debt on, sorts of businesses or industries or whatever, it's like sooner or later, he doesn't care about the deficit. He didn't care about the debt. Well, why is it then that we have Bessent come in here and some of these other guys in and around the president as it relates to the economic sort of policy of the U.S.? They certainly do care about it. You know what I mean? Mm-hmm. So I just think that's something kind of worth keeping an eye on because I think that narrative might have changed. All right, Guy, on the gap front, here's a stock that did not gap up on the heels of this Nvidia announcement, and that's Dell. And they report after the close today. And, Dell's one of those stocks where people say cheap, cheap, cheap. Well, look at the rally the stock had from 70 to where it is right now. I think it's trading about 113 or so. Reports after the close here. And I say to myself, all right, what are they going to say, right? That's better than what Nvidia had to say. And if anything, you say to yourself, well, the fact that we have Hewlett down 8%, PC weakness. Now, we know the Dell story is really about data center and servers that go into them. But I look at this and I say, okay, this is just a technical thing. It's through that 200-day moving average. You see that flag that's made. It's right there at the downtrend. People will say, well, it trades at 12 times earnings and it's expected to grow earnings at 12% a year, high single digit revenue growth here. Does this one look more vulnerable to you given what we know right here? We've heard the CapEx from the hyperscalers. Those are their big customers. We've heard now from Nvidia that makes the chips that go into the servers. People seem to be still very positive about this theme, but what does it mean for Dell?
This downtrend is intact. We talked about it yesterday. I thought it could trade through. It didn't. Hewlett Packard performance has to concern you if you're a Dell. I think if you're a Dell bull, if Nvidia starts to give it back, you have to be more concerned. And the last thing, that little gap, if you just go, yeah. So I don't know if you can sort of circle that little gap, but that gap to the upside that we saw about 2 or 3 weeks ago, around a sort of $100 or less, that's sticking out. We just started the show with mind the gaps. Well, mind the gap in this one, because there are a lot of things sort of leaning or setting up for this to sort of fill that gap on the downside. So that downtrend's intact. We're right at the 200-day moving average. Again, you throw all those other things in the mix, Nvidia, Hewlett Packard, and you got to say, man, oh man, it really looks like Dell wants to fill that gap on the downside.
Yeah, so the implied move in the options market, we're just going to do the back of the envelope map here. We take the money straddle, that is the tomorrow expiration call at the money 113, the at the money put, the 113 put. You add it together, you get a little over $9. You do that, divide it by the stock price, you get about 8.3% or so. So if you were going to buy the vol in this thing, if you thought that this is going to have a big move one way or another, and you're buying the at the money straddle, you would need basically a $9 move to the upside or a $9 move to the downside. That's a really difficult way to make money. You look at the Hewlett, I think the implied move into the print was about 8%. It's down about that. And you can say to yourself, okay, well, let's say I think it's going to break out, right? I buy that 113 call. It costs you about, let's call it $4.50 or something like that. Then you need to move, up to 117.5. So when you're looking at the weekly, it's a pretty binary sort of trade, right? And so and we're not big fans of doing weeklies or dailies or something like that, because if you get the direction right, but you don't get the magnitude of the move right or the timing right, you lose all your money. That's just again, that's not a great way to trade options. This stock over the last, kind of 4 quarters, it's had some big moves. Like I think it was, down 12% 2 quarters ago, down 4 quarters ago, it was down 17%, but then it had like a down 5% move and an up 5% move or whatever. So tricky sort of stuff. I think if you wanted to kind of play this to the downside and play for that gap fill that you're talking about, guy, just below, I don't know, what do you say, 97, $98 or something like that. If it gets going in that direction, it's probably headed back towards 80, in my opinion. That's a lot of runway. If it gaps up, then maybe it's just a bit of a relief thing. I don't think that they are going to be able to meaningfully guide up in a way. There's, pressure on their margins at 22% or something expected. Supermicro, which is trying to get back in the game and reclaim some of that market share they lost. Let's pull up the SMCI for a second. Their margin structure is half of that of Dell's. You know what I mean? So how are they going to take market share back? They're going to compete on price, right? So I don't know. Thoughts on where you think this thing could go on the downside if they were to guide in a way that it doesn't take weak guidance actually to get these sorts of stocks going lower. If you just look at Salesforce today, if you look at Workday last week, and I know there's not a great comparison here, but it takes guidance that's not better than expected after a move from 75 to 113.
Yeah, Supermicro is its own animal. I think we all agree. But throw up the Hewlett Packard slide that we have, because I think this is sort of a preview of what you could see. Again, a stock that bounced pretty significantly since the April lows, like many things, but then effectively, given 2/3 of it back in one day. And I think you could see a similar type of move in Dell. And that's why this Hewlett, to me, is sort of a foreshadowing of what you could see for Dell. It's just my opinion. So stay tuned for that. And again, I don't know necessarily what it means to the AI trade or the broader market trade. Maybe it doesn't mean a thing, but that downtrend in Dell, we drew the line. It's intact clearly. See how Nvidia closes the day. Hewlett not trading particularly well. That's got to be concerning, I think, to Dell shareholders right here.
Yeah, and I think you just made a really good point here. Like, what does it mean for the generative AI trade? Well, the Dell probably doesn't mean much. It probably has to do more with the way that they're basically operating on a price standpoint or a competitive standpoint and the like here. So to me, it feels like it could be a very Dell thing. Now, if they come out and say they're seeing a massive reacceleration in demand for servers because, let's say, the Saudis or the UAE or this, that, or whatever are buying up their servers and they can't make them fast enough, well, that would be a bit of a sea change. And then you start looking, Guy, to that gap that was, to the downside that we had late last year or so. I think it was in November, that was the second point in this downtrend or whatever. So not to spend, too much time on the Dell, but it will be interesting to see if it confirms some of the kind of demand trends that we're seeing out of Nvidia, but I wouldn't put too fine a point on it because I think it's somewhat separated from the demand for those high-end chips.
We mentioned that Amanda potentially is in labor right now. We don't know, but somebody that had a child earlier, well, was it late last year or earlier this year?
Oh,
it was earlier this year.
Months ago, yeah.
Yeah, is Elizabeth Young Thomas. Despite the fact that she is not with us today, her work is with us. So let's take a look at what her and Mario have brought forth, because it speaks to this grinding higher of the broader market, which is something we've seen. Obviously, healthcare an underperformer, and there's a number of different reasons why, not least of which the recent performance of Eli Lilly. But everything else, Dan, sort of doing its thing. And that's typically what happens in this type of environment, just sort of lower left, upper right, seemingly unabated. And to a certain extent, that's what we're seeing in this slide.
Yeah, so I think my main takeaway here, Guy, is that when you talk about, okay, so we had this very brief bear market, if you will, right, led to the downside by some of the biggest, contributors in the last couple of years. That's the AI exposed trade, and you see how they've kind of mapped this out a little bit, and the whole notion that when you come out of a period of outperformance by a specific group, and then you actually have a retest of just some, whether it be valuation levels or the like, or retesting of some narratives that have driven a lot of that performance, oftentimes you'll see different groups pick up the performance or the leadership to the outside. And, I've just over the last few years, even including 2022, I've just had the mindset that tech is driving the train, whether it was, SaaS, whether it was generative AI hardware, whether it was the hyperscalers and the like, So to me, I just don't know how you can have an S&P or a NASDAQ that comes back in a meaningful way after, some sort of correction, and it won't be led by the prior leadership. And I think that's what this slide is also telling us, that over the outperformance over the last sort of month or so was the mega cap tech stocks, the AI exposed, and that was what led to the downside. So to me, if you're going to have a new bull market that's formed with the S&P breaking out or the NASDAQ breaking out above those prior highs in February, in my mind, it can only be led by those AI exposed names. And just to be clear, Guy, you mentioned our main man, Mario. So he's doing some great work. This is the SoFi blog. It comes out every week. We preview it on Wednesday or Thursday. But if you want it in your email box, there we are, Johnny on the spot. Go to SoFi.com/on-the-money. Guy, you don't usually make a little bit of a smirk when I'm reading that out here, because it's a lot of dashes, it's a lot of this, it's a lot of that. All right,
excruciating.
All right, so we had the grinding higher here, but let's look at this and some geographic stuff here. Russia, Iran, Venezuela are big players in the global oil market. So now we're talking a little bit about commodities, with discussions swirling of possible changes in sanctions. On the margin, more sanctions would theoretically lead to lower oil and higher prices, and vice versa. Oil has been in the downtrend for over a year, but there's been a bit of an inverse head and shoulders pattern forming in oil. Oil could be primed for a breakout. Mario, I see what you're doing here. I see that breakdown level here. I see that it's grinding a little bit here, but the demand picture based on global growth, which might be waning if we have a protracted bear market, versus the supply situations, that's more in your camp, Guy. I'll leave it to that. Maybe the technicals speak for themselves, but I think there's some resistance at that breakdown level from a couple months ago.
Crude oil's been, when I say fools, I'm pointing at myself. If you've been trying to figure out a bull case, it's been foolish to do so. And I've been trying to come up with a bull case, and it's been foolish. And the underlying commodity has been troubled, in a word, despite, listen, even when you had headlines, I think it was last week, that Israel was preparing to bomb, I think, Iranian nuclear facilities. Crude oil, I think, bounced $2. Within 24 hours, it didn't give pretty much the entirety of it back. So geopolitical rhetoric is clearly not helping the story. What it comes down to, I think, not necessarily supply demand, but just a slowdown that we're seeing, I want to say, globally, and that is not bullish of crude oil. Now, what I will say, for you playing our home game, crude is still sort of backwardated. So any good news on the margins are going to get crude theoretically higher on a fundamental reason. But the geopolitical stuff is clearly not having any impact whatsoever, at least in this commodity, Dan.
Yeah, no doubt. And let's talk a little bit about the fear trade. So, Mario, this is the last little bit here we have on them. The spread between bullish and bearish sentiment turned positive for the first time since the end of January. At 19 and a quarter, the VIX is below April highs of over 50, but above last year's lows of 1186 here. You and I have been talking a bit about this. You know, the VIX, while a lot of folks focus on this as a measure of the volatility in the S&P 500, I think you and I have been focused on a couple other, risk assets that we think are maybe a better indication of risk on versus risk off. And a lot of that is, to us, the treasuries, and the selling of U.S. assets. And obviously, the stock market was one of those big assets that was sold by foreigners, but it really came about by the move in treasuries and the selling of the dollar in April. And that's the sort of thing that, got our antennas up, got a lot of other folks' antennas up. It certainly got the White House's antennas up that they needed to kind of cool the rhetoric, because when you see a VIX of 50 and you see the dollar being sold the way it was, and you see treasury yields going that way, that was kind of some haywire action there that, it seemed to be like we were on the precipice of maybe something breaking in the markets there.
No doubt. I mean, that whatever was a Tuesday night, a month or so, I don't remember the exact date, but the bond market was melting down without question. That's not me being hyperbolic. I mean, that was factually what was going on. It scared a lot of people. I got a lot of phone calls. It clearly scared the administration, because on the next day, President Trump talked about how he saw the interview with Jamie Dimon and Maria Bartiromo, how people had told him about the bond market, and he clearly backed off. And, that backing off was well advised, because it sort of assuaged some of the fears that the market was having. The interesting point is, 10-year yields went lower from there, but then over the last week or so, we got right back to where they were for different reasons. And now today you're seeing yields back off again. So there's clearly something going on in the bond market. I think people are aware that higher yields for the wrong reasons are not going to be market friendly. And I think there's some course correction going on to try to stop that. But with that said, I mean, you pull that prior slide back up, and that's another t-shirt. With that said, the market's been sort of bearish for a while now. Market sentiment is clearly bearish. The market has acted differently, but the sentiment is still out there. And that coincided with, obviously, a spike in the VIX. But one has to wonder, are we getting ready for a reacceleration of the VIX? And although we're at the lows we've seen for a while, a 19 VIX is still higher than what we've seen over the last few years. I mean, it's still at the upper end of the band. So label me somebody that think there's going to be another round of volatility coming. Excuse me.
I get it, given the uncertainty that we have in and around, trade, and we're going to get to some of those deadlines, the 90-day reprieve from China, the EU at July 9th, all that stuff is going to sneak up on us pretty quickly. A couple consumer things before we get out of here, guys. So when we had that consumer confidence, it kind of came back really hard. We talked a bit about it yesterday. A couple of names that stick out to me really quickly. Best Buy reported they took numbers down, not crazy, but like this is another retailer that has actually, kind of trying to tamp down expectations as it relates to their visibility in and around tariffs. So that's a big move lower here. I don't think that should come as a huge surprise, but it's worth noting. And then the other one is Starbucks. And this is a name that you've focused on a lot over the last, I want to say 9 months. They had, new CEO come in. They have a lot
August,
of issues
I think,
here.
right? Was it all? I forget exactly what it
Yeah,
was.
huge gap. And so, TD Towin downgrades it here. And so it had that huge gap back in August, to your point. It kind of consolidated those gains and then kind of broke out, the election and all that sort of stuff. Maybe there's some better initiatives as they had in around, kind of just bringing the skews down and kind of reorienting some of the sort of, value propositions and the like here. And this thing, has been a bit of a train wreck here. And so a downgrade coming here, it comes at a time where inflationary pressures, maybe it's on, labor, there's other things that go into the components of this sort of the price that they, or the product that they make and all this sort of stuff. And, it just seems like an odd time to downgrade this sort of thing. But again, if you're focused on value, if you're focused on a consumer that might be strapped with inflation sticking around and the like, this is probably a tough name to kind of get involved in, especially at the valuation that it's at.
Look, I was surprised by how well Starbucks traded in the aftermath of that announcement. Listen, where did the stock get up to? About 117 or something,
Yeah.
Which to me didn't make a lot of sense given some of the headwinds that they had. And incorrectly, what I said was, this was an incoming CEO whose Starbucks problems were much different than the problems that he had at Chipotle when he took over there. There were not as easy a fix. Now, the market has come to that realization, but not before the stock went from what I think like an $80 low to that $117. So the stock basically rallied almost 50%. Now, this actually makes sense to me. What I'll tell you though, and if you want to go back in time, this $74 level, which was the low, I think, in May of last year. I think it was the low if you go all the way back to the summer of 2022. And then if you want to go back even farther than that, sort of the summer of 2020, that sticks out like a sore frickin' thumb. And I think there's a really good chance we test those levels, Dan.
Yeah, summer of 69, you were 6 years old.
I was 5 years old. I was going to be turning 6 in December, but that's okay. You're close.
Deck 18. Yeah. I just had somebody, by the way, I have a friend that I met at a concert a few years ago. And we become friends, his wife and me. I was down at a music fest in Arizona and seeing Eddie Vedder, by the way. And this guy's a fan of the show. That's how we started chatting a little bit. And these guys, Kenny and Lynn, they see more shows. They're probably close to 60 years old. They're empty nesters. They're all over the country, and they are sending me their Metallica there, Green Day here, all over the place.
I love the Green Day.
They were at a music festival last weekend, and they sent me Bryan Adams singing the Summer of 69. So that's where I kind of got that from. Last thing before we get out of here, Guy. I woke up this morning. I saw the same news that you did. I saw the futures were trading up 1.5%. The S&P 500. Nvidia was certainly helping a lot of the tech names. We just went through all of those. Apple is down on the day right now. Nvidia is still up 5%, a little off its highs. Microsoft's up 20 basis points. Amazon's up 70 basis points. Google's down on the day, 30 basis points. Meta's up 0.25%. I don't know why I didn't say 25 basis points. But some of those stuff, they're kind of losing. These are all their biggest customers for the most part, right? And then we already talked about, Broadcom and Marvell, two really important names in and around that too. So interesting action. It'll be interesting to see if the market goes down on the day and how those names kind of hold up one way or another, because that's the most important thing going on today in my mind, the leadership and how they act.
And I'm waiting for some missive or salvo from the White House on the back of what we've heard over the last 12 hours or so, 14 hours or so. So we'll see. We will keep you updated on the status of Amanda and her baby. We don't have any news, but we will keep you abreast through the Risk Reversal Media website, if I may.
We won't be doing that, by the way. We won't be doing play-by-play updates.
No, not play-by-play,
but socials. You mean when we
say it? Yes, when the event takes place.
I thought you were going to be like, all right, she was just taking
No. We're not going to be talking about how dilated and we don't get into that.
That would be a little much there.
A little weird.
We're excited for that news. It's good stuff there. We have Michael Contopoulos,
high yield hottie. Am I allowed to say that?
You just did. He is Richard Bernstein Advisors. I think he's the head market strategist and the co-CIO over there. And he's been a friend of Fast Money. You and I, this is the first time he's been on the pod. So Risk Reversal podcast drops tomorrow morning. Check that out. We always love to hear from the high yield hottie.
Hundo. He's a good, I think I may have. I mean, I come up with a lot of names, but
yeah, you do.
Yeah, you do.
All right.
That's it for today. Hopefully people have enjoyed. I've enjoyed it. I think it's imperative to see how things close today. I'm just getting the mid-January vibes in my head in terms of this. See what I'm doing here? So just stay tuned, sports fans.
And with that, what do you mean mid-January?
Well, when Nvidia reported back in January, traded up to 153 and change, closed lower, 153.13 if memory serves. Closed lower, and that sort of set in motion what was then a subsequent move significantly lower in April. So just keep an eye on things there.
But equally important, I would say, and this is what Doug Cass hit us on earlier, and you said it earlier on the Risk Reversal podcast, which is probably in your favorite podcast store right now. How the administration reacts to the court and the taco thing. And don't discount that, because this is a guy who does not like to be, I think he was embarrassed by that in the Oval Office yesterday. And he's the sort of guy who hits back, and hitting back against the court and hitting back against that narrative about him chickening out means, to your point, what you said earlier, it means stronger rhetoric. It might mean new threats, and that is not positive for the stock market. So I'll just leave it at that.
Leave it at that. We'll be back on Monday. Monday will be June, by the way, which is
it will be
freaking crazy.
June 2nd, by the way. It'll be June 2nd.
And then next week is the live Fast Money event on Thursday. And I think some people listening or watching this right now will be joining us. So thank you for that. We look forward to seeing you.
Yeah, that'll be fun. That's on Thursday, June 5th. All right, everyone. Have a good one. We'll see you back on Monday.